Sacchitanand Uttekar joins in to discuss the technicals now. Sacchitanand, thanks very much for joining in. Well, it is a market where we're seeing some amount of red on the screen, but this is after 6 days of gains on the trot for the markets. So how would you approach today's Nifty dip? Would it be a buy?
Good afternoon, Ekta. Good afternoon, Mangalam. I think going by the trend, clearly we have seen that for 7 consecutive trading sessions, Nifty has maintained a positive close. And if you look at the data closely, it has managed to, recover above and close above its 5-day exponential moving average support. Now, this particular support for the day is placed somewhere close to around 25,900 even for today's session. And the way the ADX has been turning up, it is about to break above that 25 level. So overall, the structure has been very healthy. It's a classic buy on decline sequence which is ongoing. We expect this particular progress to continue, and we are anticipating that eventually the Nifty could scale towards 26,330. But at least for the day, 26,050 looks like a very significant, resistance. So we are not expecting a closing above this particular level, at least from today's trading session. But on the lower side, it has been finding meaningful support somewhere close to around 25,900. So in case if we see a decline, I think that decline could be again healthy. We continue with our stance of, deploying long positions. One can keep a stop loss at 25,840 on closing basis and build significant aggressive long positions once we see a breakout above that 26,050 mark. Eventually, we see the Nifty scaling towards 26,330.
Okay, 26,330. That's where you see the Nifty eventually scaling. Specific stocks, both frontline as well as broader market?
From the front line, we are liking TCS now. Now, if you look at the last couple of weeks, we have already seen a very steady, silent up move developing in this particular counter. It has started trending above its 50-day exponential moving average support, which is placed somewhere close to around 3,060. But if you look at the daily scale, it looks like a classic rising three formation. The overall, sequence looks very affirmative. We may see this particular stock scaling towards 3,200, 3,250 kind of level, and hence we have recommended this to our clients as well. One can keep a stop loss at 3,065 on closing basis and build long positions in TCS futures for a positional target of around 3,250. The other stock which has hit our radar is Masuka Dock. Now, if you look at the overall performance of the stock in the last few trading sessions, we've already seen a V-shaped recovery. We saw a very strong base building formation somewhere close to around 2650. A piercing line candlestick formation was established there. It reconfirmed the base, and now the stock is trending near its 50-day exponential moving average, which is placed around 2,800. So eventually, we see this rally getting extended towards 3010 levels, which is the V pattern target zone. But from a trading perspective, one can expect an immediate swing towards 2885, and hence we are recommending building long positions with a stop loss at 2776 on closing basis.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us, giving us all of your strategies. We'll take a short break, but